What are you advising your clients to do?
Well, I think when you look out at the global economy and some of the challenges that we face, whether it's this Italian budget crisis in the EU, the China tariffs and their slowing economy, there are reasons overseas, the slowing global growth, there are reasons overseas to be concerned. Back home, it is strong and the underlying picture is strong. And if it stopped there, we would say invest as usual and be very positive. The challenge is we have a hawkish Federal Reserve tone that needs to change. As long as Jerome Powell comes in heavy-handed or threatens or continues to threaten continued rate hikes, it can ruin the one pillar of economic strength that we see. And that's where we have the concern. It's from the Fed.
Okay, so what do we do?
Well, if you're a long-term investor, this could be just another blip in a continued bull market. No one is signaling the end of the bull market. So I think investors have to remain calm. I've always said emotion is the enemy of the investor, far more than a bull market, far more than a bear market. Bear markets are to be expected. I think the Fed will come around because the U.S. is one of the only strong economies in the world, and right now, in their hands, they could single-handedly bring it down, and I don't think they're going to do that. I would stay invested.
Do you think the Fed changes its tune and its course of rate hikes given the market volatility, or do they not care about the stock market?
Well, I think they raise in December. They've signaled that. They kind of have to. They don't want to look like they're going to change to the president's tough tone. I don't think they pull back and run and hide from that. But changing the tone, slowing the pace in 2019 would be very bullish for stocks. Who knows? The talks right now between Mnuchin and his Chinese counterpart could set a nice tone as well for stocks. And if we see that, we see a huge comeback. That's why you don't pull out right now just because the headlines are bad, it feels bad, and it does feel bad. But right now, I think the U.S. strong economy keeps the bull case intact.
What you just said is so interesting, Mark, because you think about the president's sort of semi-criticism of the Fed, put them even if the Fed wanted to not raise rates in December, maybe now, to your point, they have to, simply because they look like if they don't, that they are caving to the president, even if they actually really did change their mind.
Well, what a shock. The president might say something that comes back to haunt him. He's actually done the same thing with OPEC, telling them hey, we need you to increase production. And nobody wants to look like they're giving in to the president's rhetoric. So, and the same thing with the China tariff story. I mean, he's done a lot of great things for the stock market, especially with the tax cuts and the rollback of regulations. It's the top line talk that really seems to bite him once in a while and hurt investors and throw a monkey wrench where it doesn't belong. The U.S. economy underlying is still strong. Let's have that come through as the leading story. Tone it down with China. Hopefully the Fed will come around and we can go back to making some money in stocks.